So good evening, all the respected dignitaries, respected speakers, and of course, the audience, very respected professionals of the Institute of Chartered Accountants of India. Friends, at the outset, this is my privilege to welcome very wonderful speakers on today's topic, Sundar ESG and Ankit Agrawal ji, on the very important topic preparation for the ESG-BRSR reporting and public policy for MSME and Make in India scheme. So friends, we all know that nowadays it is becoming very natural system for the corporate houses that we have to revert to the nature from where we have gained the entire universe and from where we are operating through the business houses to enact as the very important and integral part of the commercial ventures. Friends, the environment, social and governance, shortly known as ESG, and basically there is a requirement of the business responsibility and sustainability reporting. There have been certain guidance note on the same, and the SEBI has also mandated certain things which are to be reported in the financial statements with regard to the ESG and business responsibility and sustainability reporting. So friends, covering various disclosures regarding the details of the business activities, products and services, details of the employees, details of the women employees in the system, and business code of conduct, commitments and goal. A lot of reporting requirements are there too with regard to the BRSR reporting system. So we have two very learned speakers today to deliberate on the topic. I am thankful to both of the speakers for giving their valued time for the Institute of Chartered Accountants of India and of course for the participants of the today's webinar. I will not take much time as we are eager to hear the learned speakers. I once again congratulate to the committee for organizing such wonderful event in the interest of the members. And we all know that the time has come that we have to give back to the environment. We have give back to the nature so that we could survive in this scenario where the things are growing like anything commercially, then we have to come back to the natural system. So friends, good evening again, and I would request the office to start the deliberation of the learned speakers. Thank you. I will request Ajit ji. Ajit ji, can you hear me, please?
Yes, sir, I can hear you, sir. Yes, sir.
Please give a brief introduction
yes, sir,
of our learned speakers and get the program started.
Yes, sir. So I would like to welcome CA Sundar ji for the first session of today's session, sir. So because sir, at bandwidth my end is little bit low, so I have not been available online in video mode, sir. So about Sundar ji, I would like to inform to the participant. Basically, sir, I would like to inform here to the faculties also, to participant also. We have around 700 plus members who are registered for today's event and watching live this through a different platform. And we faculties are on Zoom, this Zoom link, and they are through other ICI TV links, sir. So about CS Sundar ji, he is a chartered accountant with 24 years of experience with various industry leading MNCs in manufacturing and services sector. He is currently an advisor to various companies and helps improve profitability and efficiency. During his tenure as a senior executive, he has held various positions including director, CFO, controller for various business in India. As the Asia Pacific region business partner for Pfizer's sterilized injectable business, he focused on driving growth and improving profitability. Earlier responsibilities included leading the finance and compliance function at various leading companies. Sundar has been a resident director of a Pfizer Group company. And prior to joining Pfizer, he had worked with the non-banking arm of Bank of America, Merrill Lynch, and Hewlett Packard, among other companies. So now, not taking much time, I would like to invite CS Sundarji for today's session. And sir, we are very much grateful you have accepted our invitation to be a resource person on this preparation for the ESG and BRSR reporting. So sir, now I would like to request you to kindly go ahead for today's session, sir. Thank you, sir, from my side.
Thank you, Ajit ji. Uh, Friends, it's indeed an honor to be able to present here at my alma mater, the ICAI. I thank Sri Adukia ji, Sri Gyanchand Mishra ji, and the learned members of the ICAI and the CPE committee who have taken the time to organize such events for the benefit of members such as us. I want to also thank all of you for being here today, and I will try to add a little bit of value to you as we proceed during the day. The rest of the 1 hour is about the preparation for the ESG and the BRSR reporting. It's a very nice topic to look at, and I'll be brief about it. It would typically take at least 3 hours to have a good discussion, but we will try to compress it to about 1 hour, and we will see how best to make the coverage. With that, I think I will start the session. Today, ESG is primarily about people, planet, and if we take care of these two, the business will be able to get profit. So what we will cover today is what is ESG, what is the global landscape, some components of ESG, what is the landscape in India, what are the 9 principles of that the MCA came up with in 2018, what is the statutory requirement for reporting, what is the framework and the structure, and from BRR, all of us currently in the listed company environment have been working on the BRR report. It's now pretty standard that all the listed companies have been doing this. So how do you structure yourself and move from BRR to BRSR? And what are the BRSR disclosures, section A, B, C? What is the implementation approach? And then future forward, what does the future look like for all of us? What is not in focus today is also what we will see in brief. So what are the social impact of ESG? We will not see. How do you estimate the return on investment on ESG investments? What is the impact on your company's profitability on if you do ESG? What are the ESG scores? How does that work? How do the rating agencies and the financial institutions look at ESG? How do investors view ESG, either for share investments or for bond issues, etc., green bonds, etc.? And how do you achieve net zero emissions? These are aspects that we will not cover today. It is out of scope. So once we are clear with this, we will be able to move forward. Our focus, of course, is on the disclosures and our preparation for the disclosures. So what is ESG? Primarily, it's about ensuring that businesses have a socially conscious behavior. We have 3 components to it. The 3 legs of the stool are environment, social, which includes employees, labor, consumers, suppliers, and governance. Reasonably, I think all of us are familiar with what is governance, the board, the leadership, remuneration, etc. And that's the 3rd leg of the ESG scenario. Coming to what are the primary platforms. So this is the global landscape of ESG. So you have the goals, the principles, which have been laid out. The United Nations UNDP program has come up. Based on those, there are goals, principles. Based on those principles, there have been, we have arrived at reporting frameworks. There are many reporting frameworks in the world. The SEBI BRSR is one of the frameworks available. It is meant for Indian listed companies. GRI is another very famous, very regular, very popular framework, which a lot of companies have been using. Then there are regulations like the SEBI's BRSR, then there is a US EU taxonomy, there is a sustainable financial disclosures regulation. Apart from that, there are people who use these things, and they're the rating agencies, the indices, etc. So these are the universe of BRSR, of ESG. What we are going to look at is only this small aspect, So you can imagine what a small portion of the entire landscape we are going to talk about today. Sorry. So some components of ESG, like I said earlier, environmental, social, and governance. Uh, we will probably jump these slides. These are very basic. I'm sure all of you are very familiar. Similarly, the landscape in India, again, extremely familiar with many of you. In 2007, RBI said the first time they provide an advisory to the commercial banks on corporate social responsibility and sustainability in non-financial disclosures. All the way fast forward from 2007 to 2021, where SEBI said BRSR reporting is mandatory now, effective 31st of March 2023. So FY 22-23 with comparative numbers for 21-22, it's mandatory for the top 1,000 companies in India by market cap. So how do you know if it applies to you? We'll come to that. Right? These are the principles. Primarily the 9 principles that the BRSR is based on the MCA guideline. It's about conduct, fair, ethical, transparent, whether goods and services are provided safe and sustainable manner, employees' well-being, stakeholder management, and whether all stakeholders' interests are adequately protected, human rights, environmental protection, pollution control, climate control, etc., climate management, public policy, pursuing public advocacy, inclusive growth, ensuring that we take a holistic view of society and economics, and then business thrives, and the public at large. We'll see all these in fair amount of detail as we go forward. This is the UNDP program. These are the 17 principles that came up as part of the SDG goals, the Sustainable Development Goals. So starting from no poverty all the way through partnerships. This is the affordable and clean energy. All of us are familiar with India's push for the EVs and solar program that's under this. Similarly, you have the Jal Jeevan mission, which came up with, I think, water, clean water and sanitation. So each one of our programs that the government of India has taken, the sanitation program, public health program, each one of this actually falls within these 17 SDG goals. Now, against those SDG goals, you have these 9 principles. These 9 principles are mapped. So for example, poverty, you can map it to employee well-being, you can map it to stakeholder management, because employee is a key stakeholder for any business, and then you can also have inclusive growth. Similarly, each one of these are generally mapped. Okay. Now, this is an indicative map. You can definitely map more, sometimes a little less, depending on how you want to report. Now, if you, in the next slide, what we will see is, for example, how TCS has done its integrated reporting. They have taken each of these goals, these UNDP goals, and against these UNDP goals, they have actually brought up their initiatives. This is an example. Now, note please, this is not part of the disclosure, but these are explanatory notes as part of your sustainability reporting. Why is this important? Because in order to have a good background of your sustainability drive, you need to provide, as part of your investor base, you need to provide to your investor that, look, these are what your companies are doing. And this is a good example of how the various UNDP goals, the SDG goals, are actually mapped to individual initiatives within the company. And it gives a very good idea on each aspect, starting from community to employee, to water sanitation, the society, and other aspects. In between each of these slides, we will be looking at what companies are doing, just to understand the entire thing better. Okay, so what is the statutory mandate? The statutory mandate says that the BRSR report is required for FY 21-22 to be done in a voluntary manner. But for FY 22-23, it is mandatory for the top 1,000 companies by market cap. So how will you know if your company is going to be part of that list? Just go to National Stock Exchange, pull down the list of all companies by market cap, filter for the 1,000 companies. So in the 1,000th company, and they're all serially numbered, as at March 31st, 2022, the list is available on the National Stock Exchange website. If you go and pull that out, you will see, I just did a very random trace. and found that among the bottom list of companies in the 1,000 range, there are a lot of companies in the 50-60 crore turnover bracket. They are not very large companies. So at 50-60 crore turnover, there are a fair amount of companies which are sitting here as listed companies, because the market cap still comes to the top 1,000. And that's where I think a key amount of importance will go, because the top 100 companies on Nifty, on the National Stock Exchange, are almost very well prepared. But you take company 101 all the way to 1,000 and below, the level of preparation on all these initiatives is generally a little bit poor. Obviously, that's a very generic statement. There are always exceptions, but this is an area where a lot of help from our fraternity will be required. Also, listed companies other than the top 1,000 and companies that have listed even on the small and medium exchange are allowed to do a voluntary submission of BRSR from 21-22 itself. So this year itself you are allowed to do the submission, so that you start making baby steps. And disclosure is based on the guidelines, the national guidelines for responsible business conduct by the MCA. So what is our role? The finance activity is like this. You have your financial statements, you have the director's report, the manages the discussion on basically the MD&A. Then you have the SEBI LODR, you have the risk management aspects, the enterprise risk management portfolio, then you have the secretarial audit, you have CSR guidelines, and now you have sustainability reporting. Each one of these will then touch the financial statements in a big way. And as we go forward, we will see how each thing of these touches. Right? So in Companies Act, 134M actually speaks about conservation of energy. That has to be presented along with the board's report. That's also mentioned in Rule 8.3a. Similarly, the opportunities, threats, risks and concerns, the MD&A is expected to be presented along with as part of the SEBI LODR. These are for listed companies. Now, apart from that, SEBI has also said, if you want to list debt and not just... Sure. Is it better now? G. Yeah, thank you. The green debt securities, if you want to issue green debt, there are separate disclosure requirements, and that's also a very important area. Similarly, the Indian Banks Association has brought about a national voluntary guidelines in case people want to lend. So if financial institutions want to lend, they will have to integrate the analysis of ESG into their investment criteria. So these are the broad ESG laws going on. Now, as far as, so what is it that we'll have to disclose? We have to disclose environment related aspects, sustainability related aspects, and social related aspects. The consumer related aspects are included in that. Now, SEBI has proposed the ESG model based on the BRSR framework, but apart from that, you also have global standards like the GRI, the TCFD, and the SASB as other reporting and financial disclosure standards. These exist. A lot of companies already follow those aspects also. And SEBI allows you that if you're already reporting under GRI or SASB or TCFD, you can just cross-reference and say, I am following this particular reporting standard, and this is what I am disclosing there. This is an example of how you should look at it. So for example, the sustainability risk, this is TCS's annual report where they've said, this is the sustainability risk, this is the impact on the company, and this is the mitigation and the opportunity which is available. Again, this is not the actual reporting standard. The reason why we are looking at this is the approach. How is it that you should look at the risk? How is it that you should evaluate the risk and the impact on your company? And how is it that the explanatory statement for the opportunity and the risk mitigation is presented? These are explanatory statements to an integrated financial report. So coming to BRSR specifically, the disclosures under BRSR are divided into three parts. About the entity, it's covered under general disclosures in section A. The management approach and the processes is discussed in section B. And each principle that we saw, the 9 principles, each principle is discussed in point number C. That is further divided into essential, which is compulsory, and leadership indicator, where if you want to take a leadership view of the industry and your company wants to show its leadership position there, these are voluntarily allowed. Earlier we had the BRR, or even currently this year you have the BRR. The BRR has 5 sections. Disclosure is in the annual report. You have mostly qualitative aspects. It's about 59 questions and very minimal amount of quantitative indicators. Now under BRSR, the earlier 5 sections have become 3 sections. The disclosure is now required in annual report as well as on the portal, which means on the XBRL format also you have to do an upload. The qualitative and quantitative disclosures are now required. There is a lot of quantitative questions now, and you have to provide data. There are 2 options, BRSR Lite, which is voluntary and for small companies, and then you have the comprehensive one for first time adoption for the top 1000 companies. So as against the 59 questions earlier, you now have 140 questions. 98 of these questions are mandatory, 42 are voluntary. There are more than 300 quantitative data points where it requires data to be provided. And data has to be provided both for the prior year and for the current year. So starting from 1st April 2021, you'll have to provide the data. Now let's look at section 8, general disclosures. This is very simple, very similar to what was earlier being provided in the BRR report. You have the company details, products, services, operations, where are your offices, where are your plants, which are the markets you're serving, how many employees, what is your subsidiary and associate company, list of suppliers, list of distributors, are they going to be part of your BR initiative, what is your CSR detail that you're already going to disclose as part of this CSR report, and transparency and other disclosure, which out of the business conduct issues, out of the responsible business conduct issues, which ones are high priority for you are things that you will discuss. Also importantly, as part of the BRSR report, you will state what are the contact details of the person who can be contacted by anybody in case there are any queries on the BRSR report, and what is the reporting boundary. Now mind you, there are holding subsidiary and associate companies and vendors, suppliers, etc. So you have to first define your boundary here, saying that my BRSR report is only for the standalone, or no, it is for my group, or it is for my group plus for my supply chain, for my suppliers, distributors, my entire value chain, etc. So it is your call. You have to take that call in the first. So as part of the planning, this is one of the very important first steps. Then you come to B. Section B is about the management and the process disclosure. Here you will talk about your company policy, all the various policies that link up, whether you are extending these policies to the value chain, whether your board has approved these, who is the director responsible, what is the composition of a specified committee of the board, which particular committee is responsible for this, which director will you go back to, or who are the KMP who you will go back to in case you have questions or clarifications on this particular thing, who was responsible for it, whether an independent assessment or evaluation has been done for this particular BRSR report. Similarly, the key stakeholders, you have to identify your stakeholders and how you are engaging with your stakeholders, right? Then okay, now interestingly, if you are not covering, now it is important to note the company policies that cover each principle have to be laid out. So you have to tick the box saying policy 1 to policy 9, I've got policies for each and every one of the principles. Now if you don't have that, and if your answer is no, I don't have a policy for this, then you have to give answers. You have to say the entity does not cover the principles because it is not material to my business, or the entity is not at a stage where it is in a position to formulate and implement the policies, where I don't have the capability as an entity to do it, or the entity does not have the financial, human or technical resources available. Again, this is a question of incapacity, and then or it is planned to do it in the next financial year or any other reason. So you have to actually go back and give a reason on why you are not doing it. So typically, if you look at the structuring, then you'll ideally structure it like this. You'll have the ESG Operations Council, you'll have the various task forces of this. It will go back to the ESG committee. Now this is important because today a lot of the companies that are implementing BRSR for the first time don't have an ESG committee. Many of these listed companies, whoever has formed, has either sent it and given it to the risk management committee, or some have given it to the CSR committee, or some have given it to the stakeholder committee. So all that will change. We'll see going forward that very soon you will have ESG as a separate committee on the board, and that will report into the board so that you will have a single point of contact. Now this is one of the examples of how TCS actually engages. Now first thing they did is they identified the stakeholders. So they said customers, shareholders, headhunters, staffing firms, industry bodies, regulators, employees, academic institutions, partners, other collaborators, governments, NGOs, local communities. These are the gamut of stakeholders that TCS has identified. How did they actually, and as you see, they have also stated how do they actually work with these people. So they communicate as needed using project related calls, customer visits, executive meetings, mailers, newsletters, brochures. They also regularly work with these particular people on social media, LinkedIn, Twitter, Facebook, Instagram, YouTube. Please note this, we'll come back to this much later in the slide, but this is an interesting one where they've actually identified saying that they're going to work continuously with, they're going to engage with the customers on all these aspects. Similarly, for each group, they have gone ahead and identified. Okay. So what are the disclosures which are required? We'll actually now come to the disclosures. We have the principles 1 to 9, and under each of these principles, we will look at the detail in the going forward slide. So we'll look at principle number 1. This is about ethics, transparency, etc. Here, the primary action items on management are training and awareness of the BRSR principles. What are the fines, penalties, punishments, awards, compounding fees, settlements, etc. Non-monetary, any imprisonments, any other aspects that have been levied on the company. Anti-bribery, anti-corruption policies and implementation of those policies, and complaints received on account of the conflict of interest and its management. So if you notice, there are two things here. One is training. The second one is a roster, a database that will be able to monitor the complaints or the grievances, right? And these are going to be common. The reason why I'm pointing it out is they're pretty common going forward across almost all the principles. You will definitely have awareness programs, training programs, and then you will have policies. You'll have to ensure policies and procedures along each and every one of the implementation. The third common area, you have to have a ticketing system, or you have to have an ability to manage your complaints. These three are very common for any data management, especially in the BRSR landscape. So what are the action items on the company? You have to prioritize your training topics. You have to plan and deliver those training sessions. Why? Because you have to state that the total number of trainings and awareness programs held have been these many. These were the principles and these are the topics that were covered during those training programs. So much percentage of the board of directors, so much percentage of the key management personnel, the other employees and workers actually attended these programs. Similarly, the number of directors, employees, workers against whom disciplinary action was taken by law enforcement agencies on charges of bribery or corruption, you have to specify. Now this again, if somebody is going to put something here, then automatically bribery, corruption, as an auditor, you will end up asking a question about fraud. Okay. Other aspects. So these are reasons why you have to read this and ensure you get comfortable as an auditor, or even as a CFO or a controller. It's your responsibility to then take a leadership position on the BRSR. You cannot leave it then to the other aspects of the company. So you'll formulate your policies, ensure that you work with your HR, with your other organization members to get the correct policies for anti-corruption, anti-bribery, etc. This one is interesting again. You will track the conflict of interest for employees, senior management and board. Now board, your conflict of interest will be taken care of to some extent in the related party disclosures. But for employees and senior management, currently I don't know how many companies have a method of tracking. So you don't have it, you'll have to put this in place. And this is essential. Also, your value chain partner, now whatever I mentioned in green font is basically not, it's voluntary in the first year, right? So as far as 22-23 is concerned, these are basically voluntary disclosures where you can say that my value chain partner coverage in training and awareness, so I'm including my suppliers, I'm including my key vendors, etc. All of us saw in the initial stage of GST implementation where we had to train our GST, our vendors, key supply chain partners, etc. The larger companies set up training desks for GST. BRSR also, that exact same thing is going to happen. As you start implementing, the larger companies will start setting up help desks to include these implementation guidelines for their value chain partners. The processes to manage conflict of interest involving board members. This is not something which is available regularly, but some companies today have this as part of their succession management. But now it says if you want to take a voluntary step forward, then this is something also to think about. Now, principle number 2 is about So principle number 2, we speak about investment in specific technologies, whether you have sustainable sourcing of products, sustainable packaging, whether there are any product reclamation details, EPR, and we'll come to what is EPR. Similarly, whether life cycle assessments are being done for this particular product. So what are the key aspects here? Basically the first 2-3 items are relatively easy. EPR is basically the extended producer responsibility. Here, basically, if, for example, I'll take Tata Consumer. Tata Consumer actually has a statement in their sustainability report, in their annual report also, in the integrated annual report, which says that they plan to collect and reprocess all the plastic packaging waste on a brand neutral basis. So for all their products, not only their products, but they are working with various key markets, various government agencies, urban development corporations, etc., to collect all plastic packaging waste irrespective of brand and recycle it in a very responsible manner. And they've also made a commitment that they will achieve 100% extended producer responsibility of plastic packaging generated by them by 2030. As of 2021, they have already done a fair share. Similarly, different companies have done different statements, different commitments, and this is part of their responsible social conduct. Life cycle assessment, this is basically a cradle to grave, where, and we'll take a look in the next slide, but life cycle assessment is where you start with material extraction, you go on to manufacturing, packaging, transportation, use, and then the end life of the product. So action items here are, first of all, you have to have investments in sustainable development processes, which means that you will now, as part of your capex fixed asset cycle also, you will say how much of your capex is on sustainable development. Your R&D also, you will call it out separately. Similarly, you will ensure waste collection is as per the EPR, and in case you have already submitted the EPR to a pollution control board, as a finance person, it is your responsibility to call for those documents, read through, and see that they are in compliance. Also train your suppliers, train your vendors, train your distributors on all these aspects, and ensure that your product does not pollute the environment. Now it's also important, when you're doing your life cycle assessment, ensure that your boundary is mentioned, that this is the starting point of my life cycle assessment and this is the end point. So we'll see, for example, when you're taking the life cycle assessment, this is something that one of the Tata Steel has done for all their companies. Now, for each of these aspects, they are partnering with these particular associates, and these are the initiatives under which those partnering is done, right? It's just example of how different companies are taking it. Of course, Tata Steel is slightly easier from that perspective because steel is completely recyclable. So relatively easy from that perspective. Although the procedure of collection and reuse and recycling is complex and very capital intensive, as we all know, but relatively there is zero wastage in steel recycling. Now we come to number 3. Principle number 3 is about employee well-being. By and large, this is among the easiest. 3 and 5 are the easiest to go through because you already have most of this data. What you need to disclose is your health insurance, your employee health insurance, your employee accident insurance, maternity benefit, paternity benefit, daycare facility for your employees, your life insurance that you have taken for your employees, and give various aspects, whether these are for including disabled employees, including permanent employees, female employees, etc. You give it separately. But by and large, this is relatively easy. More importantly, number 3, policies for equal opportunity and processes for grievance redressal. It's important you publish your policy. It is important that you have your website updated. So these are work that HR needs to get up to date, and if they are not up to date, as finance people, please advise them. If you're an auditor, please go and advise the company to get this ready. These grievance redressal policies are very key to the entire BRSR framework. Then you have your value chain assessment. We'll come to that. The number of complaints that are made by employees and workers on working condition and health and safety have to be collated properly. Once you collate, those numbers have to be given, how many are filed during the year, how many are pending resolution, etc. And you have to do this for the previous year also. So starting from 1st of April 2021, you will be providing this information for 21-22 and then for 22-23, right? So number 4 is on how you will move, and first of all about your stakeholders. So how you will identify your stakeholders, and then once you identified your stakeholders, how will you engage with them and how you are interacting with them. Let's take a look at one example. This is the list of people that one of the companies, as you see here, has done. They have actually listed out what is the value we create for customers, people, consumers. They're differentiating consumers from customers, the suppliers and business partners, the planet and society, and shareholders. And they have mapped it to the SDG goals. Also, they've actually taken, this is an example of for customers. So you have this customers here, pages 28 to 29, where they've given a brief on who is the stakeholder, what are their interests and concerns, how they have been engaged with, and what are the outcomes, right? So this is a very interesting approach that they have taken. These are all explanatory notes to the BRSR framework and the sustainability report itself. Vedanta also, for example, has said this is one of the extracts of their annual report 2021. They've said with the local community, what are the types of engagement, what are the key expectations out of that, and what are the initiatives in 2021 to achieve the expectations as an outcome. Now, the stakeholder groups, once we have identified, we have to also identify if they are vulnerable or marginalized. Then whether you will go through as whether you will interact with them by email, SMS, newspapers, pamphlets, or meetings, etc. Which means effectively as a company, whenever you have a meeting, and this could be your admin in your company, this could be your HR guy in your company, this could be your personal people relations guy in your company, it could be anybody, right? Irrespective, you have to have a method of documenting each one of these meetings and ensuring they are properly minuted, properly archived, so that at the end of the year, you will have this information. Basically, you have to have a process for consultation between your stakeholder and the board. You'll also have to disclose whether your stakeholder consultation was used by you to support the identification of ESG topics and how you're addressing their concerns. We saw this as one of the company's aspects. In all the cases, I have given which company annual report I have referred to, so you can just go back and these will be good reading points as you go forward. Principle number 5. Again, like I told you in principle number 3, principle number 5 is also HR related. Again, relatively easy. This is not very complex. But there is one or two additional important points here that you need to note. Now, the aspects that you will do here, again, like in most of the other things, you will have to do training. You have to document whom you have trained on, which topics you have trained on human resources issues, human rights issues, what policies you have with respect to human rights. Many companies have employee welfare, they don't have human rights policies. This is a thing that you may want to reframe with sitting with your HR. Also, your minimum wages. How many employees you have been paying minimum wages, how many you have paid more than minimum wages by category, men, women, others, then specially abled, management, everything you have to disclose over here. What is similarly when you are disclosing minimum wages for the different categories, you also have to give the remuneration of the board, and these are on the next table. So it's very easy to see how transparent and the level of responsible business conduct is available. Similarly, who is the responsible person or the committee for human rights? Now this is important. Most companies today don't have this. So it will require your management to work with your board, and your board then has to nominate one person or a committee for human rights, who will then frame policies, ensure training, etc. And then of course, like we saw in other places, the complaint receipt and redressal system. Then you have the human rights assessment and diligence, and you can extend it to your value chain partner on a voluntary basis. Now, I have marked here one aspect of forced labor. Now, today you may say most industries don't have child labor, don't have forced labor. Yes, that's right. But where it is important is there are companies in India that work with the prison cells. So you have jail labor, right? Prison labor. And that's a very important aspect because, and I'll give you two examples. Last almost now 8-9 years, Himalaya Drug Company, they were one of the front runners, and they have been working with Bengaluru as well as Andhra Pradesh and Goa jails, where they use the land available in the prisons and the labor available in these jails to actually help them with the production. The Alpha is a medicinal plant. That medicinal plant and other health products are actually coming out of these jails, the jail gardens, and the jail labor is being used for that. The Karnataka open jail in Bangalore, open air jail in Bangalore, as well as some other jails are being used. One other company that does this quite regularly is the Minda Group, Spark Minda. Minda supplies wiring harness to Maruti as well as to Mahindra and Mahindra, and they have been present now for almost 7-8 years, both in Tihar jail as well as in Yerawada Central Jail. So why is this important? Because that will probably come under forced labor, right? And the other thing, one of the disclosures, and I have not mentioned it in this table, is about minimum wages. Now, jail wages are at a standard rate and it may be lower than the minimum wages. So that will call for a separate disclosure if you are using those aspects, right? So these are interesting aspects. Depending on which company you are actually looking at, you may have these kind of very separate interesting aspects that will come as part of the disclosure. And as an auditor also, you should know these aspects, that this is the business that the company does and this is how they are doing it. Now we'll come to point number 6. Principle number 6 is about the energy usage, water intensity, the greenhouse gases, scope 1, scope 2, scope 3, the waste management practices, etc. So here you have to specify how much of greenhouse gases. This is a fairly long thing. You will have to work with your pollution control departments or with your environment and safety EHS or the SHE group that will help you with these disclosures as a finance person. It's important for you to think through some of this because scope 1 emissions, scope 2 emissions, scope 3 emissions, you have to understand these aspects. how much of scope 1 emissions are actually generated by you guys, how much your company is actually contributing to the emissions, how much you are contributing through purchased electricity, and let's say by air travel, etc., and then how much you are indirectly leading to. Things as simple as how many cars your employees are currently using and how many cars you are having in your car park, including that will contribute to your carbon dioxide emissions. And these things have to be reported. How much of business travel and how many air miles and how much of carbon footprint you are leaving in that because of this particular aspect. These are aspects that have to be reported here. So it will require you to work through these and understand. You can take there are Excel files which are available that will help you to do these calculations, but you still need to know how many cars are parked in your parking lot. If you've got company buses or company organized transport, then how much is that, etc. So this is another area which is pretty complex. Similarly, you'll have to disclose how much of waste management is done by the entity in plastic waste, e-waste, biomedical waste, etc., battery waste, etc. I can tell you companies that have reported voluntarily so far, even to the extent that they've said so many kilos of waste paper, old newsprint, was actually sold by us and for recycling purpose, and so many plastic bottles in our meeting rooms we have got rid of, and each one of those in terms of number of kilos or number of tons has been reported. So if your server room uses battery and you're recycling some battery, or you're replacing your battery, that's again something that you want to actually capture correctly. As finance people, these are not things that you would typically look at, but now you will have to. So you have to set up your process in such a way you will have access to this information on a timely basis. As an auditor, you may want to look at this data and see how the company's practices are. Now, principle 7 is about affiliations with trade and industry associations. Very small list. You just have to say which are the industry associations and what is the reach and how you are interacting. Now, in case there is any anti-competitive conduct by the entity, then, or if any adverse orders have been received, then how you have dealt with it. And the third one is the public policy positions. This is voluntary, right? But here you will say this is the public policy advocated by you, by your company. This is the method you have resorted to for such advocacy, whether the information is available in the public domain, and whether these are available, the frequency of the review by the board, and then provide the web link. Now this is very important. Web link is there in many of the cases. Every policy of the company now has to go into a web link. Now, public policy, we all know that a lot of very responsible companies do it. Definitely you have the Reliances and the Adanis doing it on a very, very large scale. And these will be very interesting disclosures if they are making on how they are advocating public policy and how they are influencing public policy in line with what the industry needs and society needs. This is an example of the, this is Vedanta, where they have said these are the various industry associations. You note this question. So based on this question, they have identified, Vedanta has identified, saying that these are the various industry circles in which they are active. So like this, each one has to be identified. This is relatively easy for a finance guy because you can just look at memberships and subscriptions in your ledger and you will be able to pull this up very quickly. But as far as work with NGOs are concerned and civil society is concerned, you may not have that regularly available. Similarly, the academic institutions, you may or may not have it available. Those are things that you will need a capturing mechanism for. Similarly, anti-competitive conduct, not much is available so far in India. This is one of the things that we pulled up, where it was reported in the press, where there was anti-cartelization disclosure which was available, and the watchdog, the competition watchdog, actually hauled up some firms. This particularly involved Shivalik Agro. Shivalik has a few other companies which are listed. I'm not sure if this one is listed or not, but it would be interesting to note how these disclosures are made. And you as a finance person or as an auditor need to come up with your own disclosure mechanism. You need to have a capturing mechanism in order to be able to get these things right. Principle number 8 is about again the social impact, how you are doing social impact assessments. CSR details are available at great length. We have the CSR report. You can just take the details directly from there and finish this off. Ongoing rehabilitation and resettlement programs, only for some specific industries it will be applicable. Then you will need to have mechanisms for grievance redressal. You have to have initiatives for local sourcing. See friends, this is very important. Now you need to capture how much is directly sourced from MSMEs and small producers and how much is sourced within the same district or neighboring district. MSME you would have put a flag because anyway you have to do your MSME 1 reporting. So that information will be ready. But this is something where you have to say, out of my total sourcing, so much sourcing has been done out of my total input material. I am sourcing so much from the same district or from neighboring districts. So you need to have a capturing mechanism out of your financial reports or from your procurement reports. So you need to set up your system in such a way you will get these reports. Similarly, your social impact assessment. Now, social impact assessment is required. It is mandatory in case of acquisition by land, in case of private-public partnership. If in case there is a road company, a toll or a road company, they may have this impact. There would be quite a few other industries, but you need to identify if your industry is part of that. And then if it is actually, if you are made to do this, if it is compulsory for you, then what is the notification number, whether you've conducted internally or through an independent external agency, and provide the web link of the result. Not much is available today in the public domain. There are a few which were done voluntarily. I'm giving you 2 examples here. One is Balrampur Chini, which as part of the annual report last year, it was part of the CSR report where they actually spoke about the SDG alignment, they spoke about the CSR, about their interventions and the social impact of those interventions in the industry. Similarly, HDFC came up with a COVID relief response last year as part of their impact assessment report. And these were all prepared. So it was prepared for Balrampur Chini by third-party foundation, and it was provided by, HDFC got it done by somebody else. The HT Parikh Foundation ran this. The last principle is principle number 9, is about product recall, cyber security policy, data breaches, responsible product information, etc. This is about your consumer feedback and your grievance redressal mechanism, the turnover from the products with responsible labeling. So each of your products, you need to ensure that as a percentage of turnover, how does the information come about? What is the information that your product packaging contains? Does it speak about environmental and social parameters relevant to the product? Does it speak about safe and responsible usage? Are you giving information about recycling and or safe disposal of that particular wrapper or packaging material or product? And how much percentage of your total turnover is part of that? Then there is about the frameworks for product recall. Product recall is very common in the automotive industry. It is also very common in the pharma industry and the drugs and chemicals industry. So you need to have capturing mechanism. Those industries have it, but if it's in other products and services, then you need to figure out the safety issues around those and have the safety precautions in place. Similarly, cyber security and data privacy, now very, very important. So you need to have adequate frameworks and policies and procedures and how you are implementing those, and you have to disclose those here. And you have to say that yes, I have these things covered, and provide the web link of that policy. You also have to provide the data breach details here, and as part of your action item, you have to specify that I have received these many consumer complaints. So you have to have a consumer ticketing system. You have to say have a complaint ticketing system where your consumer can complain either on data privacy to you, advertising, your cyber security policy, your essential services delivery, whether it's on restrictive trade practices, unfair trade practices, or any other item. You will have to specify how many you received starting from 1st of April 2021, how many you received now. Now this is very interesting, and I'll tell you why. let's see how we are engaging with the various, you- earlier we saw consumer complaints, right? So who is your consumer? When we looked at the stakeholders, we saw who is your stakeholder. This is TCS, for example. TCS says, I engage with my customers using social media, LinkedIn, Twitter, Facebook, Instagram, YouTube. Now let's assume that somebody, forget TCS, let's take any other product company. Let's take Flipkart, for example. It's not listed, but I'm just giving you an example. Let's say somebody goes on, you're engaging with your customer using these social media aspects. Now your customer posts on Twitter or Facebook saying that I purchased this product, it was lousy because of this reason. Now, is this a consumer complaint? Yes, because you are engaging, you have identified that you are engaging with this. So which means you have to specify, in this you have to capture saying that I have received so many complaints, against that I have resolved so many complaints, and these many are the remarks for that. So remarks are for how many are pending as at the end of the year. This will make it very complex, guys, because on Twitter you just post something. How many companies actually sit? You may, ICICI Bank for example, or any other bank, HDFC Bank, Axis Bank, anybody else, right? If you go to just say hash ICICI Bank or hash HDFC Bank, you will see n number of complaints. I never asked for the loan, I never asked for the credit card, somebody gave it to me, they are charging this. If you are calling out that you are actually engaging with your customer on your consumer using those channels, then any complaint there is something you may have to take action on and you have to report it. So do you have that adequate mechanism? These are things that you have to think about in a company, and that's where it becomes extremely complicated. So finally we will look at how to actually go about preparing ourselves for this report. So as in all things, you have to first scope it out. You have to get your scoping right, get your goals right, your project and scheduling timeline is the anyway there, 31st March 2023, comparative numbers starting from April 1st 2021. Identify your key stakeholders. Through a data-driven materiality assessment, you engage with them. Unless you start collecting the data, you will not be able to identify materiality. As auditors, all of us know what is materiality. So it's very important to identify what is material. If you don't know what is being done, you will never know what is material. So you have to start collecting data. Have the processes and the systems that will ensure you have adequate data. Then you define your approach, you define your sustainability approach and your key performance indicators that will help you to know if you are achieving your objectives or not. Then you will analyze those KPI based on your analysis and management information. Then you will go ahead with, once you have done this, only after the analysis you will create your content. So if you have to publish it, your board is not going to allow you to publish it. They will first say, okay, I have a quarterly review, let me go through a quarterly review, right? So your board wants to review it every quarter. So you have to design your report, write out your content, create out your data, and then after your board quarterly reviews are done, you will put it for the annual review, take it through. As an auditor, you want to review it as well. You don't have to audit it today, but you have to know it because your risks will be covered there. If there is a penalty or something which is levied and you don't know about it, or if there is a product related recall or something that you are not aware of it that needs to be disclosed, as an auditor you need to have a review on that. So then both as a management, both as the director, CFO, and then finally even as an auditor, you will need to have a review of this, and then it gets published out and along with your financials. So very importantly, it's important to have a single report. So then it's not multiple reports. It's a single comprehensive source of non-financial sustainability information that is aimed to satisfy the requirements of investors, shareholders, regulators, and the public at large. So this is why you will have to move towards integrated reporting. Now let's take one more minute and see where we will be starting from 2022 all the way to 2024 or 25. You'll have to start aligning your financial numbers to your BRSR disclosures, including your MD&A. You have to have your processes and systems for ensuring high quality data management. It's a lot of data management, guys. It's not like the BRR check the box. This is not check the box. As you have seen, this is a lot of process implementation and data management. Then you will realign your board. Maybe your board doesn't have the expertise. So do you have the right members among your independent directors and among your management? Do you have the right people on board? If not, you'll have to bring them on board. Today I told you a lot of companies actually have given this job to either risk management committee or stakeholder committee or the CSR committee. Very shortly you will need to focus so much on it that it has to be a separate standing committee at the board level. So you'll have an ESG board level committee. Your investors will start looking at it because you're anyway a listed company. It will be part of the ESG index. Somebody will score you for it. If people have to give you loans, they will start looking at ESG score apart from credit score. Already brokers and analysts are today giving a separate ESG score in every company. Disclosures, of course, there's no standard for that yet. That will come. Disclosures will then apply to all companies. Today it's only the top 1,000. Going forward, it will come and it will extend to everybody, including unlisted companies. Just see the next 3 to 5 years. Assurance will have to be provided. There is no penalty for giving wrong information in FY 22-23. But that's bound to happen. Initially, when TDS law was introduced as part of income tax, they said no penalty. They said, you are helping the income tax department and you are deducting TDS and you are standing in our shoes and helping us out. Today, see, if you don't do it or if you do anything there, it's a huge penalty. Same thing will happen with BRSR disclosure. There will be penalty provision. Today it's not there for year one. There will be penalty provision for unvalidated disclosure. ESG guidance and reporting frameworks will converge, right? So today you have multiple frameworks, right? So you have all these frameworks which are there in the world, and SEBI BRSR is one of them. It will all converge and you'll slowly have, like Ind AS converged, you'll have this also converging. And more importantly, now as far as finance guys, finance teams will have to re-equip, we'll have to realign. And if as auditors also, we'll have to educate ourselves on what are the entire business model. This is about business model, this is more than just the finance. So if that is so, earlier we used to have generally, if you want to, if you want a succession plan to the CFO, it was always the finance controller. Now business finance guy or whoever is the guy who understands business finance and the business will then have a lead into the CFO's chair. And if all this business has to be understood, who will lead the race to the CEO chair? It will be the CFO. Okay. So with that, I'd like to thank all of you and happy to take any questions. These are my contacts. If you want to leave me questions, if you want to ask now, you can ask. Otherwise, if you want to ask it later and you just want to get in touch with me, I'm just leaving my links here. Thank you. If there are any questions, I can take them. Otherwise, I can hand it over to the next speaker. Ajit Tiwari ji. Mr. Krishan Kant.
Yes, sir.
Yeah, I am done. If there are any questions, I'm happy to take them.
Wait, sir. Mr. Parth. Hello, Mr. Parth. If there is any queries, we put it in text box. Okay, there is no query. Okay, wait. I'll call the Ajit sir.
Hello, Krishnavi. Sir, you have presented in such a way that I am seeing there is no query in today's chat box. Basically, you have presented all the things in very crisp and clear manner so that it is understandable. However, sir, we will placing this audio, this recording in online that DLH video also. So members are seeing those things. Am I audible, sir? Sundarji, am I audible?
We can hear you clearly.
Can you hear me? So today, sir, I have seen, sir, we got less patient backs. I was, throughout your sir, this session, I was here inside. So I have seen your PPT very much, sir, knowledgeable and all knowledgeable and very easy manner. You have, tried to touch those things. So thank you very much, sir, for joining us, sir. On behalf of Chairman CP Committee, Dr. Rajkumar Dhukia, sir, Vice Chairman, sir, Gyanchand Mishra, sir, and entire committee, sir, we are very much thankful to you. Thankful to you for joining us for today's wonderful deliberation, sir. Thank you, Sundarji.
Thank you, sir.
And sir, we will be putting, sir, your this video on DLH Digital Learning Hub also, so the member can see offline afterward this program. So this is for your information, sir. So now, sir, we will move. Thank you, Sundarji. So now we'll be moving to the second speaker and see Ankitji. So before moving ahead, I would like to introduce him. So I can say because I have the resume of C. Ankit Agarwal, who is FCA, CS, DIRM, CCCA, DISA, and so many courses peer reviewer also. So he has many degree and achievements in his resume. So to be crisp and short, I can inform to members today we have C. Ankit Agarwal ji, who has All India rank 15 by Institute of Chartered Accountants India. That CPT test held in December 2006. He got All India rank 3rd in the examination for Diploma in Risk Management. He has successfully completed so many certificate courses and workshops on GST, India, certificate course on peer review board. And he has been, very much, brilliant student throughout his, degree curriculum, be it graduation, higher secondary, matriculation. He has ranking state level in all those examinations, and he has other achievements like he has participated in many events organized by ICI branches, regional level and national level, and had so many awards also. So, and he is a very prolific speaker and active speaker on the topic MSME, state specific MSME issue, ABCD of articleship. So many seminars he has taken the session. So, sir, we are very delighted you are today part of our this CP VCM, and sir, you are today topic. So, sir, today you will be deliberating on the topic public procurement policy for MSME and Make in India scheme. Sir, this is a very important topic. So, I believe that today participant will have a very much wonderful, knowledgeable session. So, sir, I would like to invite Ankit ji for today's deliberation. Welcome, Ankit ji.
Thank you, Ajit Tiwari ji. First of all, am I audible?
Yes, sir, you are audible, sir. Very much audible.
Thank you so much, Ajit ji. A very good evening to all the members present here and all the participants participating in this seminar. I will just quickly start share screen, my PPT. Is it visible?
Yes, sir. It started now.
All right. So today we are having a seminar on the topic public procurement policy and Make in India scheme. Both the topics are pretty important and has garnered quite relevance and importance over the period of time. Public procurement policy for MSMEs has been with the objective of, giving impetus to the MSME sector, working for the growth of MSME sector, and Make in India scheme is for the overall objective of making India a global manufacturing hub, a global, I should say, investment opportunity, offering investment opportunity to various investors globally, and making India the most preferred destination to invest. So to begin, I'll take up public procurement policy as my first, at the outset. So public procurement policy, the full name is Public Procurement Policy for Micro and Small Enterprises Order 2012. Now, let's see what is the objective of this policy. Basically, the objective of this policy is to promote micro and small enterprises. Please note the word micro and small enterprises. It is not MSME. MSME stands for micro, small, and medium enterprises. This particular public procurement policy is only for micro and small enterprises. All right, medium enterprises are not covered here. And as far as the micro and small enterprises are concerned, it shall carry its meaning from the MSME Act. MSME Act defines micro and small enterprises as those enterprises which are into manufacturing and service. Though recently there has been a change in the MSME definition, or I should say there has been a change allowing the traders to register on the Udyam portal, whereby there has been some level of confusion amongst the traders as to they are MSME who are eligible for all sorts of benefit, and that is not so. They are only eligible for priority sector lending. All right. So this particular policy is for micro and small enterprises in manufacturing as well as service sector. All right. Moving ahead. Now, what is the share of procurement under this policy? The government has taken an initiative that whatever government spendings are being done for procurement purposes, whether it be by the ministry or departments or such other entities which we shall discuss in the PPT coming slides, the intent is that a minimum of 25% of the total annual procurement should be from micro and small enterprises, that is MSEs. Earlier it was 20%, it was revised to 25% in the year 2018. Now, within this minimum 25% criteria, we have another two sub-targets. One is 4% annual procurement is scheduled to be taken from MSCs which are owned by scheduled caste or scheduled tribe entrepreneurs. And second sub-target, I should say, is that 3% annual procurement should be from MSCs which are owned by women entrepreneurs. So this is a welcome step for encouraging the women entrepreneurs to come forward and participate in this tendering process, and of course it shall help in upliftment of their business also. So now moving ahead, how do we understand, how do we decide which MSME shall qualify for a particular tender? Now, before moving, understanding the details, we need to be clear in mind what L1 means. I think most of the people who are into tendering process who are aware of that, they shall be knowing that L1 means the lowest tender or the lowest bid price in a tendering process. All right. Now, how do we give preference to the MSCs? Here, the policy says if the price which is quoted by a MSC is up till 15% of the L1 price. That is, for example, say, a large company has applied for the tender and his price is say 1 lakh rupees. And I as an MSC has applied and I have quoted a price of say 1,10,000 rupees. So that is within the 15% limit which has been prescribed under this procurement policy. If it is so, then the preference shall be given to micro and small enterprises. And if such micro and small enterprises can reduce their price to 1 lakh, that is the L1 price which has been quoted by that large company, then the tender shall be allowed, or that work shall be allotted to that particular MSC and not that other company or L1 bidder, which has initially applied for a lower price. So this is how micro and small enterprises get preference. Even though they quoted 10 rupees, or I should say 10% more than the price which was quoted by the large companies, still an opportunity was afforded to those MSCs that if they can bring their price down to L1 price, their goods shall be procured. All right. In this manner, MSCs are given opportunity and procurements are accordingly made from MSME so that a minimum 25% criteria can be met. Now, who are the eligible buyers? As I have told, micro and small enterprises are the eligible ones. But initially, when the policy was floated, the MSCs which were registered with DIC or Khadi Village Industries Commission or Board, or the Coir Board, or the National Small Industries Commission, or Directorate of Handicraft or Handlooms, or Udyog Aadhar, or any other body which is covered under the Ministry of MSME was eligible. However, with the advent of Udyam, there has been a change. Now, these industries which were registered under different bodies of the MSME are required to get themselves registered under Udyam. And it is very clearly spelled in the notification which was issued in June 2020 under subclause 4 that whichever enterprises are registered with any other organization of Ministry of MSME should register themselves under Udyam. So basically, with effect from 1st of July 2020, MSCs registered under Udyam registration are only eligible to avail the benefits of this present policy, that is the public procurement policy. All right. Now, what does the MSCs owned by scheduled caste or scheduled tribe mean? Basically, MSCs shall be considered to be owned by a scheduled caste or scheduled tribe if it is a proprietorship concern, with proprietor being a scheduled caste or a scheduled tribe person. If it is a partnership concern, then at least 51% share should be owned by a scheduled caste or scheduled tribe partner. And in case of companies, 51% share should be held by scheduled caste or scheduled tribe promoters. And as far as scheduled caste, scheduled tribe, and women entrepreneurs are concerned, who intend to avail the benefit of this policy, they should disclose their status as such in the Udyam registration. Basically, the verification of they being SC or ST or being a women entrepreneur shall be based on the Udyam registration certificate, where the portal facilitates filling of this information at the time of registration. Moving ahead. Now, which are the buyers? Who are the buyers which are mandated by this procurement policy? There are 3 categories of buyers. First is all central government ministries. Second, all central government departments. And third, all central public sector undertaking or enterprises. Basically, this policy being a central policy has mandated it all for the central ministries, departments, and enterprises. It is not mandated for the state government or state ministries or departments to follow this policy. However, there are several state governments who have come up with their own public procurement policy, like the state of Assam, Tamil Nadu, Karnataka, Rajasthan, etc., who have formed their own legislation, have formed their own policy, have formed their own procurement orders, and they are being followed at state levels. All right. Now, whatever procurement are being made by these ministries or departments or enterprises, they are being reported at the MSME Sambandh portal. This is a portal which facilitates reporting of all informations regarding procurement, as well as what kind of procurement the units are wanting, how much procurement have they done, what is the percentage of procurement they have been able to garner from the MSMEs. So these all kind of information are uploaded on this portal. I'll just try and take you to the portal to show how it operating. Just a second. Is the portal visible?
Sir, we can see.
Is the MSME Sambandh portal visible?
Sir, portal we cannot see, sir. We can see only this slide, which buyers are mandated.
All right. Then I'll move to the PPT because I think switching again and again will be difficult. So this is the portal. There is a hyperlink.
Okay.
from there we can go to the portal. All right. Now, moving ahead, what are the other benefits which are offered under this policy to micro and small enterprises? First, the tender sets are free of cost. Second, there is no requirement of payment of earnest money, because normally in a tender process, whoever applies, they need to submit earnest money for applying for tender. So that is exempted. Now there are 358 items which are reserved exclusively for procurement from micro and small enterprises. There is a specified list of these 358 items. If these 358 items are procured by central ministry or department or by any of the enterprises, public sector enterprises, then it has to be procured from MSEs only. So this is a very important step which has been taken by the government to promote MSEs. Another important step which has been taken to promote this policy is the linkage of this policy with the GEM portal. To make it more transparent, what the government is doing, all the procurements are made through GEM portal. GEM is the government e-marketplace where all those tenders are floated, and it is completely transparent. And this is how the government is working to facilitate this policy. All right. Now, inclusion and exclusion. As far as inclusion goes, as I have already stated, there are 358 items which are reserved under this policy, and there are other items also which can be procured from MSEs to meet that minimum 25% criteria. It's not like it 358 ही हमने reserve किया तो उसी से लेना. It's not like that. There are other items also which can be procured depending on the satisfaction of the margin that I have just explained. If it is between 15%, if it is up till 15% from L1, one becomes eligible under this policy. Now, exclusion. As far as exclusion goes, the traders, distributors, and sole agents, as I have already stated, since they do not fall under the definition of MSME as per the MSMED Act, hence they are ineligible under this procurement policy. As far as the joint ventures or consortiums with foreign company goes, they are also ineligible as there is no provision under the Udyam registration to register them. Third, exclusion is the works contract. Works contract is not covered under this policy. It has been clearly spelled out. Now, how do we work for the development of MSE's vendor? Like, how do the MSEs get to know that any such procurement policy has been floated, any such tenders have been floated? So what the government is doing, they are organizing various types of vendor development programs or buyer-seller meets, whether at the state level or at the national level. So these kind of vendor development programs help the MSMEs come forward, participate in those programs, and get to meet the various sellers who intend to buy, and also get to know such kind of programs or such kind of tenders which are being floated by the government. This is how they get to know the various departments which are into procuring public procurement. So these are the initiatives which are taken for development of vendors, MSE vendors. Now, as far as the promotion of the scheme goes, as I have already told, whatever procurements are being done, the initiative from the government is that all those procurements should be through the GEM portal. GEM portal being a very transparent and government's e-marketplace is accessible to one and all. All right. And so various, MOU has also been entered with by the MSME and the GEM for integrating the GEM with the Udyam registration portal, so that all the MSEs which are registered under Udyam registration gets moved to the GEM portal. And also there is another important option when you register under Udyam. At the time of registration, an option is given to the applicant if they want to also register for GEM. So anyone who has not opted for GEM, they can amend their Udyam registration and get themselves registered under GEM portal. So if you're registering under Udyam, you'll automatically get yourself registered under GEM also. So this is another important reform, I should say, which has been taken by the government to develop this MSEs or given opportunity to these MSEs to register on the GEM portal as well. There is a review committee under this policy, which has been formed under the chairmanship of Secretary of MSME to review all the compliances under this policy. Basically, the work of this committee is to review the 358 items which has been reserved for the exclusive purchase from MSCs. And also there is an option to this committee, or I should say, and a right has been conferred on this committee where it is not at all possible for departments or ministries to meet that 25% minimum criteria of procuring from MSCs. It can be for any reason. So they need to apply for exemption to this committee. It's not like if for any department, they can voluntarily decide not to buy. Rather, they have to apply to this committee, put forward the reasons why they are not able to procure that or achieve that minimum 25% target. And if it is deemed fit by this committee, then only exemption can be given to that particular department or ministry for not procuring minimum 25% from MSCs. Other important observations of this policy. It is a policy which is mandated through MSME Act Section 11. Section 11 gives the power to float such orders. All right. And if there is any grievance of MSE for non-compliance of this policy, that can be lodged on the Champions portal. I hope everyone have, some of you have heard of Champions portal. It is a portal basically where all MSMEs can file their grievance. Also, there are several knowledge matters which have been uploaded, which can help MSEs grow their business. So you can formally go and lodge your complaint as a MSE and otherwise also as an individual or association if you deem fit. If there is any wrongdoing, that can also be lodged there. And as an MSE, if you have any idea which you need to share with your government and which you think can help the MSEs grow, that can also be shared on this portal. So it is a very nice portal. After the presentation gets over, I'll suggest you should visit once and get to know how this portal functions. If there is any another important aspect of this policy is, it's not about procuring directly from MSEs. In case any tender is floated and it is obtained by a large company or a large unit, and that is subcontracted, that is a back-to-back contract is entered with the MSE, which establishes the fact that the supply shall ultimately be made by MSE, then it shall be counted within that 25% procurement criteria for MSEs. So this is another important aspect of this policy. Now, as I have said, this policy is a delegated legislation deriving its right from the Act, that is the MSME Act. However, at the end, you'll see a line which states PPPMII Order 2017 is an executive order. Now, what is this? We'll learn that PPPMII is basically Public Procurement Preference to Make in India Order 2017. So this is all we had for public procurement order for MSEs. Now let's see what public procurement preference to make in India order 2017 means. Basically, this particular procurement policy is a part of Make in India scheme. I am speaking about it just before I move into the Make in India scheme so that we can correlate both the policies. Now, the objective of this policy. The objective is pretty clear, that we need to encourage Make in India. We need to promote manufacturing and production of goods, services, and works in India. Basically, we need to promote the people in India so that they come forward. The manufacturing facilities in India develop, the local people get more opportunity. There is greater employment generated in India. And of course, the greater income flows to those local people. All right. So this policy was floated way back in 2017. Over the years, it has refined, and the latest changes which had happened in this policy was in the year 2020. Now, before we move into the policy, we need to be clear about some of the terminologies which shall be used in this policy, all right, in this order. Now, first we need to understand what is local content. Local content, as per this policy or this order, is the value added in India. which shall be the total value of item procured in India, excluding net domestic taxes. The purpose of excluding net domestic taxes, basically what I can understand is the GST component, since we are eligible to take input, so it doesn't form part of our cost, minus the value of imported content in the item, including all custom duties, as a, just a second, as a portion of the total value in percentage. Now, it sounds a bit difficult to understand. Basically, what we need to see here is, if you are getting, say, any work order, all the work order has a BOQ with it. All right. In the BOQ, what are the items? All the items are specified along with rate. So what we need to understand here is the items which shall be used in this particular procurement, whether I as a supplier, I'm procuring those goods locally or I'm importing those goods from outside India. So whatever rates are specified in that BOQ, we shall calculate the value of the content which has been imported from outside India and reduce it from the total value, and then arrive at a percentage which shall be the local content. For example, I get a work of say 1 lakh rupees, of which I am importing items valuing 20,000 from outside India. In that case, my local content shall be 80%. Basically, the remaining 80 is something which I'm offering from India itself. So this is the quantum of value addition which is happening in India. All right. Now, class 1 subcontractor. Class 1 subcontractor, class 1 local supplier means a supplier whose local content is equal to or more than 50%. That is a supplier who is supplying who's supplying goods or services or works, and where the local content is more than 50%, it shall be categorized as class 1. Where the local content is between the range of 20 to 50, it is class 2, and if it is equal to or below 20, you are a non-local supplier. L1, as we have already discussed, is the lowest tender value or the lowest bid value. Now, what is margin for purchase preference? As we have seen in the public procurement MSE order, there the margin was 15%. Margin is basically the maximum extent to which the price quoted by the class 1 local supplier above the L1 can be accepted. So here it is 20%. So if someone is quoting a price which is up till 20% of L1, that particular supplier may be considered for the purposes of this order. All right. Now, here, who are the procuring entity? As we have seen in public procurement MSE order, the procuring entities were central government ministries, central government departments, and central government public undertakings. Now, but here, the definition covers ministry or department or attached or subordinate offices or any autonomous body which is controlled by the government of India and includes all government companies. So it has basically a wider impact or a wider coverage, I should say. All right. Now, here, who are eligible? How do we decide the eligibility? It's a bit different from the public procurement MSE order. In procurement of all goods, services, or works, in respect of which the nodal ministry or department has communicated. Now, you will be confused by the word nodal ministry or department. Basically, these are those departments who are taking care of the products which are supposed to be procured by the procured under the scheme. Basically, for pharma, there will be a nodal agency or the ministry who is taking care of the pharma sector. For atomic purpose, there will be ministry who is taking care of those atomic or defense purpose. So, based on the product which has been which is floated or for which the procurement is being made, different ministries or departments are classified who shall act as nodal ministry or nodal department for the purposes of this order. All right. Now, in procurement of all goods, services, or works, in respect of which nodal ministry or department has communicated that there is sufficient local capacity and local competition. Basically, if a particular product is being procured and the ministry is of the opinion that there is sufficient local ability, then in that case, only class 1 local supplier shall be eligible to bid. That is, If it is so very much available, then for sure the local content will be more than 50%, because a class 1 local supplier is someone whose local content is 50%. And since there is sufficient availability, so the government is of the opinion that in those cases only class 1 local suppliers should be allowed to bid in this particular in those particular orders or procurements. All right. And if you don't fall in class A, that is, there is not sufficient local capacity or local competition as per the ministry or the department, then class 1 as well as class 2 local supplier are eligible to bid in those procurements. Just one thing we need to note is, where the tender value is less than 200 crore, in that case only class 1 and class 2 are the local suppliers who can apply. But where the value is more than 200 crore, then there is something called global tender inquiry, where outside participants and non-local suppliers can participate. So in case the value is less than 200 crore, the class 1 and class 2 local suppliers are the eligible ones who can apply under this order. Now, the manner to decide purchase preference. Now, how do we decide that a particular work should be given to a class 1, particular work or goods or a service, it can be anything, is given to a class 1 local supplier? In case you fall in clause B, that is, I'll just go back, clause B, that is, in case of clause 1, it is absolutely clear that class 1 local supplier can only apply. So there is no question of any other entity coming into it. If you don't fall under this category and you are falling under clause B, then in that case, we need to follow this purchase preference order. Here, there are two categories. One, a work which is divisible, another which is not divisible. So now, first of all, we'll discuss a contract or a tender which is divisible in nature. Supposedly, you have floated a tender for supply of say 100 machines. Now that is divisible. If you think, and if you, in order to promote this order, you can give say 50% of the work shall be, or 50% of the supply shall be done by someone who has got, who has who has won the L1, who is under L1, and the remaining 50% can be supplied by the class 1 local suppliers. All right, now let us understand how this purchase preference works. Under this policy, if the L1 is a class 1 local supplier, then the matter is sorted. Then the full quantity shall be awarded to that class 1 local supplier. And in case L1 is not a class 1 local supplier, in that case, 50% of the order quantity is allotted or awarded to the L1 who has made the lowest bid. Thereafter, the remaining 50% is offered to class 1 local supplier. And he is called upon to match the L1 price. As I have explained in the public procurement MSE order, that in that case, in the MSE order, if your price was within 15% range, you were called upon and asked to match the L1 price. And if you match that price, then the work was awarded to you. Here, the gap is 20%. If your quoted price is within 20%, all right, then the remaining 50% shall be offered to that class 1 local supplier who has quoted the lowest price. For example, the L1 price is, again, I'll take an example of 1 lakh rupees. He has quoted a 1 lakh rupees as L1. Now there are 3 class 1 local suppliers. One is 1,05,000 rupees, who has quoted one, another one has quoted 1,10,000 rupees, and the third one has quoted 1,15,000 rupees. Now amongst these 3, the lowest one is the that class 1 local supplier who had quoted 1,05,000 rupees. The first opportunity shall be given to that particular supplier, and if that particular supplier can meet the L1 price, that is the 1 lakh rupees, then the remaining 50% work shall be allotted to that class 1 local supplier. Now, in case that particular class 1 local supplier declines, or that particular class 1 says that out of the 50%, I can only supply you 30%, then that remaining 20% or 50%, as the case may be, shall be offered to the next class 1 local supplier, that is the local supplier who quoted 1,10,000 rupees. All right, and in this manner, the process keeps on going. And at the end, if the class 1 local supplier subsumes the remaining 50%, well and good. And in case it is not, all the quantities are not taken by the class 1 local supplier, the person who qualified for L1 shall be eligible to get the remaining order. Okay. Now, this is the case where the contract or the work was divisible. Now I'm discussing a case where the work is not divisible. That is, I can't decide and split the work and give 50% to him and 50% to her. Not like that. Now, this is a case where the works are not divisible. In that case, if L1 is a class 1 local supplier, then the whole quantity is awarded. And in case L1 is someone other than a class 1 local supplier, then the lowest bidder among the class 1 local supplier is invited to match the L1 price. And if that particular class 1 local supplier matches and his price or his quoted price was within the margin of purchase preference, that is 20%, then the work shall be awarded to him in totality. All right. And in case that particular class 1 local supplier declines, then the next higher class 1 local supplier gets the opportunity, and so on. It keeps on moving till any of the class 1 local suppliers whose quoted price was within the margin of purchase preference gets the work. And in case no one of the class 1 local suppliers gets that work, the work gets allotted to the person who was the L1 bidder. That is the one who quoted the lowest price. Other important points under this order, where the agar value is less than rupees 5 lakh, then this particular order doesn't apply. All right. And for class 1 and class 2 local suppliers, when they apply for work, they need to self-certify regarding the local content, the percentage of local content, because they must for sure be knowing beforehand from where they will be procuring those goods. And in case the procurement or the order is of a value of more than rupees 10 lakh, then CA or ICWA, cost and works accountant certification is required. All right. Another important point under this policy is where any of the ministry or departments has their own preference policy, which was approved after 1st of January 2015, then such policy shall prevail over the provisions of this order. That is, the policy which was already in existence shall prevail over this order. This order shall not be applicable for that particular ministry or department. Now, to summarize both the procurement policy, a small comparison, a brief comparison. Objective. What is the objective of the PPPMII policy? It was basically to promote the micro and small enterprises. But the objective of PPPMII, that is the Public Procurement Preference Policy for Make in India, is to encourage Make in India and promote manufacturing and production of goods, services, and works in India. Nature. The first one is a delegated legislation deriving its right from an act. The second one is an executive order. It is not deriving its right from any of the legislations. Margin for preference, here it is 15, and on the other side it is 20. Minimum procurement criteria under MSME was 25%, but under this PPPMII, it is 100% or 50% as the case may be, as we have studied. Eligible suppliers are MSEs registered under Udyam registration. But in this Make in India scheme, the class 1 local suppliers are the eligible ones who may or may not be a MSME in fact. Applicable limit, there is no exemption unless applied for. As I have told, if any of the departments are unable to meet the 25% minimum procurement criteria under public procurement policy for MSE, then they need to apply to the review committee, and then only exemption can be given. But in this Make in India scheme, there is an exemption for procurements where the value is less than or equal to 5 lakh rupees. The buyers under the MSE scheme are the central government ministries, department, or public sector undertaking or enterprises. However, the definition of procuring entities is quite wider in Make in India scheme, which covers ministry, departments, and all its attached or subordinate offices, all the autonomous body which are controlled by the government of India, as well as all government companies. As far as the sectors or items coverage is concerned, there are 358 items reserved under the public procurement policy MSE. However, under the public procurement Make in India scheme order, there are 20 product categories that have been covered. There are 358 items here, and on the other side, we have 20 product categories. Like pharma, I said, pharma may have different items underneath pharma term. So basically, pharmaceuticals was an industry or a particular product category which was covered under this Make in India public procurement policy. And beneath under that, there are several items which gets covered. So this is a bit different. Here the items are specified in the MSC policies, but in the Make in India scheme, the product categories are specified. All right. Maybe towards the end, I'll just try and touch upon those product categories if time is left. And as far as the grievance mechanism is concerned, under the MSC scheme, we have a champions portal where the grievance can be filed. However, under the Make in India public procurement policy, we have a component authority is determined by the procuring entity who shall be responsible or who shall be dealing with those complaints. So it's not the champion portal where the complaint can be lodged. It is rather the authorities or the designated entities which are decided by the procuring entity who shall deal with the complaints of those MSMEs. So this is all we had about public procurement. So before I move to Make in India scheme, if there is any query, if I can take it up.
Mr. Is there any question in chat board? Mr. Jay from technical team.
Should I move ahead then?
Poonam ji, can you? You go ahead, sir. Meanwhile, just I will check and get back, sir.
All right, thank you. Now, the Make in India scheme. I should say, ये सपना नरेंद्र मोदी जी का है. And this is a very, very big initiative which was taken by Shri Narendra Modi way back in the year 2014. It was a time when the economy was on its very low level. India was, I should say, facing a recession kind of a situation where the investor confidence had shaken. People were quite concerned whether India will be able to cope up with those situations. At that moment, this particular policy or initiative was taken by Shri Narendra Modi ji, and it has indeed been a big achievement since 2014, because after this policy, there has been several schemes which has been floated by the government, several initiatives has been taken by the government, which has brought in a huge amount of FDI into our economy, and has reduced the legislation, or I should say, reduced the quantum of government interference. Rather, the Prime Minister's tenet of minimum governance and maximum governance has truly lived up. There has been several changes. We shall look into it, what changes or what initiative the government has taken, and how this scheme has gone through. All right. It was the single largest manufacturing initiative which was taken by the Department for Promotion of Industry and Internal Trade. It being on such a large scale, it was the largest manufacturing initiative, I should say, which was taken in the recent history. The purpose was simple. We have to make India the manufacturing hub. We have to make India the most preferred destination, as I have already spoken. The intention was to make India self-dependent and self-reliant, कि खुद के पैर पे खड़े हो सके. We can offer opportunities to the investors all around the globe to come to India and see what India offers, what are the opportunities we have, what are the opportunities we have which can foster ours as well as yours growth. So there are several such thoughts behind bringing this scheme. So these were the 25 sectors which were initially the prime focus area under the Make in India scheme, where lots of effort was placed, technical as well as non-technical, which was floated. Website was floated where all the necessary information was floated on these 25 sectors, so that FDI can come into India, and these 25 sectors can foster growth. Not only FDI, the intention was to create an overall development of these 25 sectors in India. There can be investors in domestics as well as international. The prime focus was to develop these 25 sectors in India. All right. The intention of this scheme was to increase the share of manufacturing sector to the total GDP of India. The target was to increase from 16 to 25 by 2022, which fortunately till now has not been achieved, and the time has been revised till 2025. All right. Now, there have been several initiatives, as I have already told, which has been taken directly under the Make in India schemes, or there are several other initiatives taken under other schemes, which has an indirect impact to foster this particular Make in India scheme. All right, so let us understand what are the different initiatives that has been taken till now. First, foreign direct investment. The government has been very liberal on several sectors and activities where FDI has been permitted up till 100% under automatic route. So it is a very welcome step. Investors can easily come in and invest in India under those sectors or activities, and since it is covered under automatic route. Now, during the last 1 year, several FDI changes has been brought in. As far as the defense sector goes, the FDI has been increased from 49 to 74% under the automatic route, and under the government route, that is under where we need to obtain the permission from the government, it can be increased up till 100%. Under the insurance sectors, it has also been increased from 49 to 74% under the automatic route. Under the telecom sector, it has been increased to 100%. FDIs are allowed up to 100% under automatic route. And similarly, in petroleum and natural gas sector also, FDI is permitted up to 100% under automatic route, but on those cases where in principle approval for strategic disinvestment of public sector undertakings engaged in public and natural gas sector has been initiated or has been approved. FDI regulations has also been streamlined, has also been eased. Earlier there was Foreign Investment Promotion Board. All the licensing, all the approvals, all the coordination of different ministries and departments was done by this particular board. Now it has been abolished. Now a very conducive and a very user-friendly interface, or I should say an online portal has been bought. That is Foreign Investment FIFP portal, which is controlled by the DPIIT, Department for Promotion of Industry and Internal Trade, which acts as a single point interface where all the foreign investors can log in and place their application. It is a very user-friendly interface. All the new investments, all the new investors can use this website. All right. Another important step which has been taken by the government of India is scheme for investment promotion. This particular scheme is quite old. It was launched in the year 2008. Basically, this scheme basically acts as a one-stop solution for all the initiative that has been taken by the government of India to foster investment in the country. All right, this particular scheme was renewed for another 5 years for the term 2021 to 2026. Under the scheme, there are 4 components. First is investor targeting and facilitation. Second is investment promotion. Third is project management activity. And fourth is foreign travel. These are the 4 components which are which are taken care of, or where the spendings are done to bring an investment from all over the world, or in fact lure the local domestic investors to come forward and invest. Under the first component, that is the investor targeting and facilitation, basically it is an hand-holding kind of an exercise where you help the investors analyze the location, you guide them through the regulatory compliances which needs to be done, you help them get the necessary approvals or the clearances from the various central and state ministry. Besides that, there are various investor focused and outreach programs, various joint commission meetings are organized, and various supports are offered to the Indian missions for market entry support programs. We will discuss in detail in the coming slides. I'm just quickly summing up the words. There is another project monitoring group who monitors the proposed investment in India. There is an investment clearance cell which operates through a national single window system, which is an online portal which offers services of all India approvals which needs to be taken, guides you through what kind of approvals are required for an investor in India. It may be a domestic or a foreign entity, whichever way it is. Then it supports the development of industrial clusters. Basically, whatever industrial parks are there in India, a kind of rating are assigned to those industrial parks. Whoever are performing not well, supports are extended to those parks so that those parks can be developed. And this is the way the parks are monitored, industrial parks are monitored. Then basically there is a FDI monitoring cells who takes care of the FDI, quantum of FDI that has come into India. If there is any reduction, they take necessary steps to bring in FDI and promote the investments from foreign countries, bring those investments in India. So this is the kind of initiatives which are taken under this component. Next component is investment promotion. Basically here the intention is to create the brand of India, to promote brand India. So what is being done under this component is various kinds of promotional events are organized or business meets are organized, and those entities who come forward and organize, it may be in the form of industry association like say FICCI, FINA, who organize various kinds of industrial promotional events where various industries, whether it may be on the buyer front, on the seller front, both come forward and get to know what are the opportunities available in India. So such kind of programs are sponsored under the scheme. Similar initiatives are taken by the state government also, and by the also by the embassies, the Indian missions abroad, for promoting the brand India, or I should say the Make in India scheme. So such kind of the events which are organized under by the, whether it be by the industry association or the government or the Indian embassies or the Indian missions, are basically sponsored through this component. Project management activity basically in nutshell is a management of all the initiatives that has been taken under this policy. All those initiatives which we have just discussed, it is basically a way to monitor whether all those initiatives are being lived up or are being truly emphasized, are being truly put in place, or or they are complied or not. So this kind of initiative is taken. And under the fourth category, basically wherever the government deems fit that the government officials can be reputed on an official as an official delegation abroad. So those kinds of spendings are covered under this foreign travel. Now, another initiative of the Ministry of Commerce for Make in India scheme has been the formation of steering committee for advancing local value add and employability, famously known as SCALE. Basically, this committee was constituted to work for work for the betterment of 24 subsectors which have been identified. As we have just discussed few slides before, I told there was 25 sectors which was the focus area under the Make in India scheme. Over the years, it has been upgraded, and as on date, there are 27 sectors which are the focus area under the schemes. There are 27 sectors, And this particular committee has identified 24 sectors, which are over and above this 27 sectors which I have just told. So these are the 24 subsectors which has been identified to be, the India is sufficiently self-reliant, and there is sufficient scope of having a good manufacturing setup in India where we can generate employability. There is a very good potential for export under this subsectors. So this is the kind of opportunity which has been seen by the Ministry of Commerce, and accordingly this particular committee has been floated, who shall take care in developing this 24 subsectors by forming different policies from time to time. Another initiative is the empowered group of secretaries, which has been formed to take care of various hindrances which are faced by the investors when they come forward to invest in India. So this is another initiative which has been taken. ODO, that is one district, one product. It is a very unique kind of a policy which has been floated by the government of India. Basically, this policy takes care of finding the uniqueness of a particular district. Basically, what here happens is you identify a district by production of unique products. All areas has its own uniqueness. All right. So what here we focus is, we focus on a district where production of unique product is done, which can be globally marketed. So by identifying the strength of those areas, we offer those districts to potential to attain economic growth, generate employment, generate good manufacturing setups of those particular products which are very much unique to that district. By doing this, the Make in India scheme of empowering the locals come forward, or I should not only the locals, also the foreign investors, by identifying the uniqueness of those areas. These kind of industries are being developed under this scheme. So the Ministry of Food Processing Industry has very nicely come up with this policy, with this project, and has identified those areas and has very nicely put it on its portal. So if time permits, I'll just show you how it works, how the same is presented. Another initiative is the investment clearance cell. This is a cell which basically provides end-to-end facilitation to the investors, starting from the very pre-investment advisory to obtaining all licenses from state as well as center to setting up of the industry. Under this investment clearance cell, national portal, as we have already discussed, national single window system has been floated. This particular system or website offers an integrated access to all the approvals that an industry requires, whether it be on a central level or it be on a state level. This website, under this website, you can select the tabs, you can opt a state. Thereafter, you need to select what kind of service you want, what kind of approvals you're looking for, whether it is for land, whether it is for building, whether it is for pollution, whatever it may be. You just need to select those tabs, the drop-down menu will appear. You select and submit, and you'll get to know what kind of approvals are required. So it is a very good initiative. However, as of now, only 14 states have integrated under this system. There are several more to go. Once it is fully operational, I'm very sure it will offer a uniform platform to, like, we as professionals, we can work sitting anywhere in India for any of the companies or entities anywhere in India. All right, a person sitting in Mumbai, we can get to know what kind of licenses or approval are required to those entities. Sitting in Guwahati, I know what are the approvals required for a establishment in Mumbai. So it is a good initiative taken. Another initiative is Invest India. Basically, it is a joint venture which has been formed by DPIIT, FICCI, CII, NASSCOM, and various state governments. It is basically a first point of reference for investors in India. Another important initiative is the formation of India Industrial land bank. Basically, the plan is basically the thought behind is here a national plan will be formulated for development of clusters. When you say manufacturing clusters, basically industrial belts. To make it simple, instead of state and center simultaneously taking initiatives on their own, both of them come together and formulate a plan and decide the clusters which needs to be developed for betterment of that particular state and India as a whole. So this is the thought behind bringing India Industrial Land Bank. Another important initiative is the National Design Policy. Though it is quite old, it was formed in the year 2007. However, after the advent of Make in India scheme, several changes has come up, several reforms have happened. As on date, there are initiatives are taken for formation of design centers and innovation hubs in various industrial clusters, especially in the Northeast area. This is the focus area under the scheme. Also, initiatives are taken for formation of Department of Design under various IITs, NITs, and private sectors, colleges which are offering engineering and architectural studies. Also, initiatives have been taken for formation of chartered society for designers. Like we as chartered accountants, we have an organization, an institute to take care of that. So a good initiative is being taken to promote the designers, to offer registration to the design professionals. So this is another important initiative under this Make in India scheme. Ease of doing business. The ease of doing business has always been at the forefront of any government, I should say. The easier it is, the better it is for the investors to come. The World Bank does ease of doing business rating every year for 190 economies on the following 10 parameters. And it is good to see that India has climbed several notches up over the last couple of years. So what are the few initiatives which have been taken by India under the ease of doing business? First, under the start of business, I'll just go back. The 10 parameters cover like starting a business, how easy it is for an investor to start a business in India, how convenient it is for an investor to register a property in India, how convenient it is for obtaining construction permit, obtaining electricity, obtaining loans, trading across border import and exports, what is the convenience offered to the investors, how convenient it is to resolve insolvency. Such are the initiatives or parameters which are considered while deciding on the ease of doing business index. As far as India is concerned, for starting a business as a parameter, a good initiative has been taken by the MCA, which facilitates a very quick formation of companies through its SPICE Plus form, which offers not only incorporation, but also various other facilities like obtaining PAN, obtaining TEN, obtaining director identification number, obtaining goods and service tax number, and various other formalities, various other registrations. So it has been a good initiative. Basically, this particular form has brought about 10 services under one roof and has helped 2 ministries, 1 department, and a government to merge, to come forward and set up a form which can offer those services. Besides PAN 10, there is also EPFO registration, PF and ESI registration, professional tax registration, opening of bank account, allotment of GST, and so on. Another important initiative of the Government of India is online building permission system, which was introduced by the Ministry of Housing and Urban Affairs, which is a single window for obtaining building permission. It has already been implemented by the Municipal Corporation of Delhi and Greater Mumbai, and by several other states. As of now, there are 14 states who has opted for OBPS portal and has registered under it. So gradually, with all the states coming in, it will become really easier for the investors to come forward and not to face the hassle of going to all different departments to obtain different kind of building permissions. Trading across border has also been made convenient with reduced time, since everything is now electronized, is online. So, we can go online, we can apply for bill of entry, we can apply for, upload the documents with a digital signature. So these kind of convenience which has come forward over the years and has made import and exports much more convenient as compared to the previous times. We have a portal of IceGate, which offers various facilities like electronic filing of bill of entry, shipping bill, e-payment of custom duty, web-based common signer utility for signing all the custom documents, as I've already told, and end-to-end electronic IGST refund. So it is a very good portal and a very convenient portal, thus facilitating investors to come forward and invest in India. Resolving insolvency. The Insolvency and Bankruptcy Code of India 2016 was a very big game changer under this parameter. It has reduced the time and has brought in maximization of value of assets under the scheme. The code has a success as the creditor is in charge rather than the debtor, which was previously there. There is an increase in recovery rate to 71% as against 27%. So these are the quite big initiatives and the big benefits which has come forward with the introduction of IBC 2016. Another important step under EODB, which has been taken by the DPIIT in consultation with the state governments, is the formation of Business Reform Action Plan. The concept behind is basically all the states in the union territories in India will be ranked based on the business reformation or the legislative reforms they have brought forward. So this is an interesting concept where the states and union territories are ranked based on the reforms they bring forward. So the more reforms they bring forward, the better it is for the investors, the more convenient it becomes. So whatever reforms are brought, they are uploaded on the portal, which is very much viewable by the common public. Startup India initiative is another important initiative taken by the government of India, for which has the impact of transforming India into a country for job creators instead of job seekers. For paucity of time, I'm just quickly moving. Another important initiative was public procurement policy, which we have already discussed. Public procurement preference to make in India. I'll not go in detail again. Then development of logistics sector is another initiative which has been taken. Under this initiative, the PM Gati Shakti National Master Plan was formulated. And for infrastructure connectivity, development of infrastructure connectivity to various economic zones. The idea basically was to improve the logistics in India and reduce the cost. Then project monitoring group has been formed by the DPIIT, which takes care of investments where the investment amount is 500 crore or more. Then several industrial corridors have come up under this initiative. The first being the Delhi-Mumbai Industrial Corridor, which was developed, which has, basically the program aims at providing multimodal connectivity with a plug-and-play infrastructure, I should say. It is a complete city, I should say, a big city where industries, as well as the residents, as well as the, sustainable life can be led. Such kind of infrastructures are developed. As of now, there are 11 industrial corridors which are being taken up for development. This is the map. So you can see this, it's all over India where the industrial corridors are being developed. There are various industrial development support and incentive schemes which are offered by the government. In the Northeast, there is a scheme called Northeast Industrial Development Scheme. For Lakshadweep and Andaman, it was LANIDS. There was also industrial development scheme for the Union Territory of Jammu and Kashmir and Ladakh. There was industrial development scheme for Himachal Pradesh and Uttarakhand. So these are the initiatives which have been taken by the government to promote industries in those backward areas, so that the industries or local entrepreneurs can come forward and the Make in India objective can be met. Industrial licensing has has almost been done away with, except for some of the specific sectors which are reserved for public sector, say atomic and railway operations. And there are only 4 industries which require industrial license as of now. Rest of the industries doesn't require that. Further, the industrial license time has been increased from 2 years to 3 years, and there is an option of auto extension of 2 years, successive 2 years, which takes the industrial license validity to 7 years. There is a industrial entrepreneur memorandum for those entities which do not fall under MSME and do not require industrial license. They are required to apply for industrial entrepreneurs memorandum. Now the website for industrial entrepreneurs memorandum has been revamped and has become really convenient for investors to apply and get the industrial entrepreneurs memorandum. So basically, with the Make in India scheme coming into picture, there are several states who have come up with their own local initiatives, like Advantage Assam, Make in Odisha, Tamil Nadu Global Investor Meet, and Vibrant Gujarat, and similar such kind of initiatives are taken by various states. As far as the Indian ranking goes, India ranks 63rd among the 190 countries in the 2020 report. There has been a good jump. And India is amongst the top 10 improvers in 3rd time in a row. So that is really promising picture for India. And India is right now amongst the world's fastest growing major economy as per IMF, International Monetary Fund. India has become the most preferred investment destination and the 7th most valuable national brand in the world. This is how the FDI has increased. You can see a plunge near about 2013, and after the Make in India initiative was introduced, the graph has seen a good amount of growth. As of now, it is contributing 2.4% of the GDP. And in 2020, there was $64.36 billion of investment in India, FDI investment. I'll not go into the sectoral impact. Basically, these are the progress which have been achieved after the introduction of Make in India scheme. Several investments have been achieved, several a good amount of FDI has come into those sectors. So this is basically that has been presented in those sectoral impact. So now basically the Make in India scheme, I should say it was the first vocal for local initiative that exposed India's manufacturing domain to the world. Our Shri Prime Minister Narendra Modi has always been very vocal for local, I should say, and it should be the case. It is very much welcome. As of now, we are into the second phase, or I should say the Make in India 2.0, where 27 sectors are the focus area. DPIIT in coordination with the action is coordinating the action plan for 15 manufacturing sectors, while the Department of Commerce is coordinating for the remaining 12 service sectors. So the sectors which are covered are these: aerospace, education, finance, environment, chemical, textile, and so on and so forth. And DPIIT, as I have already said, we have formed a steering committee group, which have identified 24 subsectors, which are again the focus areas, and India is working on it to to develop the strengths and the necessary competitive edge in those sectors as well. So that's all I have from my side on this matter.
Thank you, Ankit, for wonderful session. In fact, I can see in my chatbot of this today's VCM, sir, we have lot of praise. In fact, appreciation for your session. Like we have got from Bajrang Kundlia. It's thank you so much, sir, for such a wonderful session. From Saurabh Agarwal, from Deepika Ahuja. So we have very good feedback of today's event, sir. We have got good feedback for today's event. And also we thank you for explaining so well about the procurement policy and the Make in India concept and how the government is facilitating, for the people in this direction. So, sir, from our side, we are very much thankful to you for, joining our session and enlighten on the subjects. To Sundar Saab also, sir, I would like to say thanks from CP Directorate. So, sir, we have very nice session today. We were around, 1,000 plus 100 registrations, and at the same time were around 900, members they were watching the show from across country and globe, sir. So, sir, thank you very much, sir, for that wonderful session. And sir, we will say goodbye because now already 6:25 we have, So from our side, thank you so much, sir. We upload for the information of the participants. We'll upload the video, that will be on DLH Digital Learning Hub. You can see there in your login. And CP hours will be created after 2-3 days, sir. Thank you, sir. Thank you so much, sir.
Thank you. Pleasure.